Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Viewing the US dollar index, which tracks the greenback strength against a basket of 6 major currencies, has slowly regained momentum after earlier dropping away from its fresh highs around 92.82 back to the bottom side of the range, roughly, as you can see here, around 92 figure 10. The market has somewhat renewed its upstep as the relative strength index rebounds off the midway point. Technically, though, we should, at this point, still continue to focus on that top side target of 93 figure 60, which in terms would see the euro retest the lows of 117.50.80. As you can see here, there is a little bit of divergence, though, which does give some concern to the bullish case. Firstly, though, on Thursday, US Federal Reserve Chairman Jerome Powell delivered his second day of testimony before Congress. It was slightly grilling for him, as there was a lot of questions thrown at him about inflation. However, Powell reiterated that signs of inflation will likely remain elevated in the coming months before moderating, while acknowledging that the US is in the midst of an unparalleled economic reopening on the heels of the pandemic-induced recession. However, figures released on Thursday showed that the number of Americans who applied for first-time unemployment benefits fell to 360,000 in the week ending in July 10, which was down from 386,000 the week before. The Federal Reserve has said that inflation and the labour markets are two factors it is monitoring to determine monetary policy. So looking at the technicals, as I say, the dollar index has potential to rally on at least about 40 to 80 points. This would put the euro roughly around that 117.50.80, and that's where I draw the line. Because if this pattern does develop, MACD is holding a weak positive signal. So if this bullish divergence does kick in, we could see a rebound back to 118.50, and with the top side likely to see a cap in the short term around 119.15. As you can see, there is divergence also on the Australian dollar. Although we did see a sharp decline overnight, the market should still be a little bit cautious in terms of the RSI and also the MACD. Now, with the close under 74.40 has given some aspect that we could see a drop down towards 73.65.70. I haven't got a very strong view on that. However, there is a few negative candles here, but the divergence that's kicking in quite aggressively does give me some concern that we could see a rebound back to 74.55 on to 74.85.95 and reassess from there. So somewhere around this region here where all the tops are. Also to note, there is a bit of a trend coming through with the ADX to the negative case, but as I mentioned, it's the divergence that's really given me some concerns. Since dollar yen reached its objective of 109.60.70, the market has paused. Keep an eye on this RSI, because if it continues in this pattern, then we could see a short-term rebound to 110.45 with the cap holding at 110.70.80 area. With the British pound, the market is still a little bit concerned to the downside at present due to the RSI, but the MACD is not negative. I'm not overly negative on the pound, but I would rule out a challenge down to 137.40.45. And from there, we could see a short rebound, and that is back up towards its top side, somewhere around 138.65 to roughly around 139 figure 60, and reassess. And with sterling yen, the target was reached to the downside overnight on Thursday at 151.55.60, as you can see here, and has been respected. Now, in light, if the sterling leg does actually weaken a little bit further, we may see one more challenge, but I'm not going to get too bearish at this level, although there is a trend that supports a bearish case for the ADX. But it's the RSI that I'm looking at, and let's see how it plays into tonight. It really depends on the legs. but the sterling leg has to break down further to get that move through that 151.55 area down to 150.70.80, which should show a bullish response. Finally, we saw a little bit more bullish traction overnight for gold, and it reaches its objective somewhere around 1,830.35, or with the resistance around 1,831 to 33. Nevertheless, inside those parameters, this is where I felt the market may top out. At present, we do have a rejection from the RSI, but not confident enough to give me a call to the downside as of yet. But if this pattern does continue, then we could see a drop down towards 1,800 and reassess from around this level. It is a little bit tricky as it's taken a very slow grind up, but nevertheless, I think the market reaching its objective may see that pullback. And finishing off with oil for the week, as you can see here, it's heading back towards its bottom side target as called for earlier in the week to 69.5 to 70.20. Reassess from there, because if we do see that break, then that would trigger another further round of supply and head on down towards 68.70 a barrel. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the great start to the new weekend.